Well, we're in an election year here. In fact, we're in an election cycle as we record this video, and I'm going to tell you something. With election cycles come a number of things, including heightened emotions. And we never want your emotions to dictate your investment decisions. Today, I want to talk to you about how to election-proof your investment portfolio. Keep it right here. Good day, everybody. Chris Heerlein here of REAP Financial, host of Retire Ready TV every Wednesday on KXAN. Thanks for making this part of your day. If you like our channel, be sure to hit the subscribe button, click the bell for notifications. I drop new content on this channel every Wednesday so you can stay on top of the latest. Now, today I want to talk about ways to election-proof your investment portfolio. And let me tell you something, it's common for most people to panic about their finances during an election year. But stick with me in this episode and you'll walk away with some thoughts, some techniques to make you feel more comfortable, a little more at ease through this investment and I should say election cycle. So here's the thing. When we look back over nearly 100 years, you can take a look at the chart. Over the last nearly 100 years, we've only had 2 presidential election cycles that have ended in the stock market in negative territory. Think about that. A lot of us, we consider, if my candidate doesn't win, if the red party or the blue party doesn't get into office, well, then the sky is gonna fall. And historically, the presidential election cycle has not dictated positive or negative outcomes. It's the general markets, it's the economy, it's what's going on geopolitically, it's what's going on with the jobs market, it's what's going on socially. There's so many other things that dictate the market rather than just the election outcome. You can see on this chart that whether it was the red party or the blue party, more often than not, stock markets ended positive in the president's first year in office. So again, we're talking about the election cycle year and the first year of a president's term. And here's the thing, we can argue that this is a very polarized election, and I would agree with you, but we have to lean on the data. And what the data shows is historically, there's a better chance the market ends positive. Now here's how we start talking about election proofing your portfolio. It's about diversifying your assets amongst many asset classes. I want you to think back to 2022. The markets were down across the board. Bond markets, equity markets. Many of the things that you invest in today were suffering in that year. And let me ask you this. If you think back in 2022, what went up in your portfolio when the markets were going down? If you're a more conservative investor, maybe a retired investor, you may invest in bonds. Well, bonds in 2022 were negative in the 5 to 15% range. Equities 20 to 40%. Nothing was working. In today's higher interest rate environment, yeah, we don't like the idea of higher interest on mortgages and car loans and everything else, but guess what? For more conservative investors, we can get much better yield, higher guarantees than we were in past years. So think about your portfolio mix, and do you have things in your portfolio today that are going up if the bond and stock markets are going down? Do you have things in your portfolio that aren't going anywhere, aren't losing any money if the bond and stock markets are going down? This is called true diversification. We like zig and zag in the portfolio and having dollars and cents that aren't going anywhere. Maybe they're going up even when the more traditional assets are going down. So you may look at things like real estate. You may look at things like medium and long-term bank CDs, 3 and 5 year CDs. You may look at multi-year guaranteed annuities that are paying, as of the date of this recording, 5 to 6% guaranteed. You may look at indexed annuities that are allowing you to participate in the market without downside. You may look at utilizing buffered ETFs that can give you some downside protection while you're still liquid in the equity markets. There's a number of strategies that a lot of our successful investors use at REAP Financial to make sure that they got that true diversification. Now, listen, if you've got questions around that area of investments and maybe alternatives, be sure and leave your questions in the comments and I'll address those in upcoming videos. Now, another thing I want you to consider is creating more safety in your portfolio. If you considered what's happened in 2024, we have seen all-time highs in the market. And generally, when you see all-time highs in the market, this is a good time to maybe consider taking some chips off the table. I'm not talking about getting off the market or out of the market. I'm talking about harvesting some of these all-time high gains so that when the market does correct or when there are downturns, you have powder, you have cash ready to deploy at discounted prices, okay? That's something that oftentimes you're buying when the market's really running up, and then when the market's down, we don't have a lot of powder standing by to deploy, and that's the time to look at buying. So that's a good way to look at the markets right now in 2024. Heading into the election, we are still, as the date of this recording, at all-time highs. What is your strategy to harvest some of these returns and have some powder standing by? So enough on that. I want you to, most importantly, through this election cycle, maintain a long-term strategy. Do not let emotions take control of your investment decisions. If you are in your 30s, 40s, 50s, 60s, you've likely been in the market through many of the downturns. And historically, we've seen that the market comes back and more. And so when we look at down cycles in the market, there's a slide here that you'll notice the duration of those downturns as compared to the bull markets. And when you look at it in this form, you understand that although it's painful, the downturns in the market historically are much shorter and they turn around much quicker, resulting in higher bull markets and higher markets in general. Do not let the election cycle change your long-term investment approach. Instead, focus on things that can give you better diversification, better guarantees, and maybe harvesting gains as we walk closer into this election cycle. Now, this next video, it talks about keeping emotions out of your financial decisions. Click to watch now.